Hey guys, good morning. How's everybody doing today? Um, like always, let's have a great investing day. Feel free if you guys want to take a look at any stocks. Like always, here I take a look at stocks you guys want to look at. We can also just pretty much talk about the overall market. Oh man, this is pretty insane. Let me just make sure everything is set up. Oops. So good morning, good morning, good morning. Let's see what we had. We had some crazy earnings, right? I think for later today, I am going to do a video on skills. Stock market, right, just tanked yesterday. Hopefully it's not like that today. But let me know, guys, what's going on. That's everything. Let me just make sure. Posted. Yep. All right, so first, like always, let's start off with the overall market. I just want to see what earnings we have this week again. So yesterday we had Activision, right? Activision and Skills. I think those two did pretty crazy. I am more of a gamer investor. What's going on, Duck? How's it going, Duck? How's everything? But you wanted to take a look at something, right, Duck? I forgot what was the stock you mentioned. And let's see. Let me just take a quick look. So right, yesterday we had Skills. That one's just been pretty interesting to watch on Twitter. I don't know how much of you guys like are on Twitter, but Skills has been all over the place. Investors from both the bear and the bullish sides are just attacking each other. So Skills is probably one I'm gonna do a video on later today. Activision did have a nice day. Let's see. I think the stock was up about 5%. What's going on, Kim? Yeah, Activision up 5.2%. But it's pretty much sitting at the prices where we looked at it. I think it was Kim. Was it you, Kim, who asked about Activision, I think yesterday? And the stock was around $91. So not too much movement. The only thing I want to see is we're seeing it with everything, right? Like how Chris mentioned with Corsair. Corsair had earnings yesterday. They did amazing. Oh, it wasn't you, Kim. I forget who it was then. I think it was someone. I forget who it was. Maybe someone asked about it. But like Chris mentioned, right, Corsair yesterday took was up pre-market. All right, it was up pre-market on great earnings and then just sell off overall. So could that happen with Activision again? Activision this morning, probably, right? We'll have to see. That's what we tend to see. Pre-markets tend to be pretty strong for strong earnings, but then sell-offs like Corsair. But Corsair's up nice, right? Pre-market is up 2%. Kim, you just bought some Corsair. Pretty cool. Darius, you want to take a look at First Solar? Is that First Solar? Probably not. I don't know why. I think it might be. Oh, it is First Solar. We can take a quick look at this one in a bit. Darius. I just want to take a quick look at what other earnings we have today. This morning we had GM. Not too interested in them. I feel like some people are interested in SunPower. Someone mentioned it in one of the comments. But I'm not too into the solar world right now. In form of business aspect, right? We have PayPal after close. That one might be interesting. We have Rocket, Etsy, Uber, Twilio, Fastly. We got some really interesting ones for sure. And we have Mercado Libre. I think that's the one I'm probably most excited about. Does anybody have any earnings this today that they're excited about to see? And let's see. I just saw your video yesterday and I don't know what's the difference between growth stocks and a value stock. I mean, Kim, Duck, all right, we'll take a look at Zillow for sure. For you, Duck, I know you mentioned it. Oh, Tattoo Chef, they have earnings tomorrow, Chris. Overall company, one earnings doesn't really make or break a company for me, Chris. And they just announced a new acquisition with Tattoo Chef, right? So I'm pretty excited. I'm really excited to learn more about it and just how the overall business is growing right now. Morning, Jose. Hope you have had a fun birthday party last night. Yeah, it was more just a get together with my brother. It was nice. Family was there. We had some good food, so it was good. Your question, is it possible to build a lucrative portfolio with solid companies, but only buying 5 to 10 shares per company. I think it all right. 5 to 10 shares. I like to look more, Jabiki, in portfolio sizing. So portfolio sizing is more based on percentage wise, right? Obviously, 5 to 10 shares of Amazon is a whole lot different than 5 to 10 shares of, let's say, Apple, right? There are completely price difference. So I tend to do more percentage wise opposed to buying shares per company. But I do think it's great, right? You build positions portfolios over time. At the beginning, maybe you might have small positions, but as things progress, they grow on over time. And I think that's probably my favorite method of doing so, JPK. I don't go a full position. And if I do go a full position at the beginning, I still add up over time. And that's what I feel has helped me out a lot with my returns. Kim Jr., Etsy. Okay, you're excited about Etsy. Mobin, good morning. Marissa M, how do you feel about OSS, One Stop System? I enjoy One Stop System, right? One Stop System is probably one of the smallest market cap companies that I have. It's definitely taken a beating, right? It's one of those growth stocks, especially since it's a micro cap stock that just has taken a beating. But I'm still enjoying it. I really enjoy the product that they're working with, the overall accelerators on GPUs. And for those that don't know One Stop System, let's take a quick look at them. So OSS stock, when I first did my video on One Stop System, Monk, I haven't done a video on skills. If you see here, this is my tab for skills. I'm taking a look at a lot of different information before I collect my video. So Monk, that video should be out later today. But One Stop System, right? One Stop System, super small company, less than $100 million. This is one that I've like I said, I think I talked about it when it was around $3 to $4, so I'm still pretty green on it. Maybe even below that. And I've added up here too. I don't mind. One Stop System is a company I don't mind continuing to add, but at the end of the day, I know it's a super small market cap company. It's going to be super volatile. So for that, I limit my exposure. This is a company I can see being bought out by a big player later on in the life. Not the reason I'm getting into it, but I can definitely see that being a potential thing. For those that don't know One Stop System, like I said, I've done a few videos on them, but they pretty much create these form of GPU accelerations and just different products that are used for data center, but this is more like data center at the edge. So a lot of military usage, a lot of movable parts, and like I said, I've definitely done a few videos on them. So this is pretty much my favorite small company at the moment. Doug, we have Singa today. So this is pretty interesting, right? I was just looking at earnings whispers here, and obviously they only show the ones that are super popular. I didn't know we had Tattoo Chef coming up. Obviously, it wasn't too popular for them to post it, and I didn't know Singa was tonight as well. It's going to be pretty interesting to see how the overall gaming market is still doing. I mean, Activision did pretty strong, so it could be a bullish sign for Singa. What else do we have? We have Fables of Europa, SQBG. I think you mentioned that one yesterday, right? I just want to take a look at what that is. It does definitely take a look at the videos first, just to get an overall understanding of what they're hitting. But I have done a few videos on them. It's like I said, it's my favorite small market cap company. So this is Sequential Brands Group. Interesting. They're down about 53%, 28 million. Wow, this is a super small company. Fables of Europa. This is insane. So this is one that I would say is going to be completely volatile. But it's quiet from time to time. The GPUs I think are going to be gold for the next few years. But yeah, right now, obviously, right? Obviously, they're gold just because of the overall demand and the overall shortage of them not being able to produce what they need. So Europa, are you mainly just trading this one, Europa, or is it more of a long-term investment? And Jabiki, thoughts on MVCR first? Let me just take a look at what's. I feel like I've heard of Novacure. All right, we can take a look at this one too. Man, I'm getting my hair. What's going on, Lucy and Vivian? GILT. I feel like I did I really recently? Nope. This is another small market cap. We've looked at this one, Gillette Satellite. We can take a look at this one too. And then Lucy wants to take a look at XSPA. Express Spa Group. All right, we can take a small cap. Oh wow, you guys are coming with some small market caps today. So I just want to take a quick look at what you guys want to look at. But first, again, let me see earnings whispers. We have a nice amount of earnings today. Let me know what you guys are excited to see today. Like I mentioned, I think Twilio, I'm excited to see. I have Mercado Libre. Good morning, Anjudo. I know someone was mentioned Etsy. What's going on, Ice Skater? Jesus, any thoughts on Unity? On Unity after Activision's earnings? Jesus, I haven't really looked at Activision's earnings yesterday. I mentioned it was my brother's birthday, so I didn't do too much information reading last night. I've only kind of been looking at skills. I think after skills, I might just look at Activision, and that's actually a good thing. But Activision turned to be did great on their earnings. It seems, right. The stock price was up 5%. So in bullish sense, it could just mean that the overall gaming market is still doing great, and in like a higher picture thing, it can show that hey, Unity can probably still be doing great. But on the other hand, I don't think there's too much correlation. I think only one game for Activision was made through Unity, and that's Hearthstone. It's still a big player for Activision, but I don't think any other games have been made from Unity by Activision. Let's see, Activision games made on Unity. Oh, was there okay, never mind. It seems like they also might have made their Call of Duty mobile from there. That's actually pretty impressive. I didn't know that. I'm not sure though. It just shows that hey, yeah, it is. All right, so Activision was published through Unity. So overall, right? Yeah, I gotta see how things are doing. Activision partnered with Unity to publish Call of Duty on the mobile devices. Boom, boom, boom. Renegade Huya. I mean, Huya, I think we looked at that yesterday, right? No major difference for Huya. I'm still enjoying the stock Renegade. Like I said, this is a $4 billion market cap on this live streaming company in a market that continues to grow. I think this is going to be, in the long term of things, a no-brainer for me. In the short term of things, we're going to see a lot what we saw right now, right? Just volatility up the wazoo. Seeing jump to new highs and then pulling back to where it was at a year ago. But overall, I think Huya, for me, long term of things, is going to be a no-brainer. Chris, Jose, which Fang plus M do you think will have the biggest 2021? Will have the biggest 2021. I'm thinking Google and Facebook. I do think Google and Facebook have the highest chance. But I wouldn't. You're missing one A. I got confused there. I'm like, which one am I missing? I do think Facebook and Google have strong potential for sure. But they all have done great, right? They've all have every year. Those continue to do well. The one I think will probably do the least, the worst, I think would probably be Netflix. If I had to pick one to do the worst, it would have to be Netflix. Watch it be the best performance after I said that, right? Normally when I give when I give the one I probably hate the most, the one I hate the most is usually the one I do the best in. The one that ends up doing the best. But I do think Netflix might be the slowest one. And then, I mean, I think Apple and Microsoft will probably give similar rates. And I think they're going to be slow, but at the end of the day, they've just proven again and again that they are just powerhouses. So Fanny, the safety issues, from what I've read, right? I haven't really dug too much deep, but from what I've read, it hasn't really been much of a safety issue for Peloton. So that I don't think would really deter me. The production issue, I haven't read too much about it, Fanny. What kind of production issues are they having? Let's see. Peloton news. Is it still production that they are not meeting their production side? Oh, Kim, yeah, man, I'm sorry, guys. If you were at the stream yesterday, you guys know I said I was going to eat some Lucky Charms to make sure we had a green day. I did not eat the Lucky Charms, so I'm pretty sure that's why we had the red day. I don't know if I'll make the same mistake today, but I'm making no promises. I'm definitely not making any promises. What's going on, Ray? How's it going? How's everything? So, Vanny, yeah, I don't know too much about Peloton's issue. Chris, Amazon hasn't moved much recently. It's gonna run at some point soon. It's been trading in this. Yeah, Chris, that's what I've seen a lot of. I was gonna put Chris here. What's Amazon stock, right? That's what we've seen with a few big players, right? The Fangs plus M. They really haven't moved, and like you mentioned, right, since July, it's gone up, right? 4%. 4% is still decent. Maybe not compared to what we saw last year, but 4% is still an okay return, right? In a year, it's not horrible. Yeah, in theory, it's been super quiet. Look, it's just been building this base at that 3,000 price. In my opinion, like, just looking at this, I'm not a technical guy, but I would say any purchasing around 3,000 will give you a nice support level, right? Good morning. Since we're talking about Peloton, I think we should talk about IPOF rumor with Equinox holding GYM, Hotel, and Peloton. With Equinox Holdings, gyms, hotel, and Peloton competitors. Bloomberg released the article yesterday. Not sure who those are. Is PayPal a value stock? So, Kim, I know you asked the question, right? You were talking more about growth stocks and value stocks and other stocks, right? I kind of talked a little bit about it in yesterday's episode. I mean, I think every person might have a different way to kind of distinguish the companies they own. One way that I do, might be completely wrong, right? But I put my companies into a few metrics, into a few distinctions. First, a growth stock. A growth stock is a company, in my opinion, that's growing at least over 15% annual growth rate for the next like 3 to 5 years. They're either positive in cash flow from operations, they're either positive in earnings, or if they're not, they're gonna achieve that within the next 12 months. I want to say probably a good one for me, a good example of a growth stock would probably be maybe C Limited. Let's take a look. Let's go, where is it? Simply Wall Street. Simply Wall Street. And thanks, Mr. Bear. I'll take a look at that, right? So see, right, the company is not profitable. They are positive in cash flow from operations. They are growing at over 15%, right, Kim? So this is something I would consider a growth stock. Skills, on the other hand, Skills is something where I would consider more of a speculative growth stock, where I put stuff like that when it's They're growing at crazy levels, right? Skills is expected to grow at crazy levels, 27.2%, but they're not profitable and they're not positive in cash flow from operations right now. And they're not able to achieve that within, analysts don't expect that to be happening within the next year, within the next 12 months. So skills would probably be something I put in a speculative play. Things I normally put in speculative play, are things that I wouldn't open up a big position in unless I'm super bullish. I think Unity is not expected to be any of those anytime soon, and it's still a big position in my portfolio. Let's take a quick look. Right, so Unity, they are almost making positive cash flow from operations. They're growing at huge level rates. But they're not expected to. So this would kind of be a mixture of like growth speculative to me, but I'm super bullish in this market and I'm willing to kind of risk it for the biscuits and go into a heavier position size. And then I don't value stocks. I kind of said value stocks in the last, I don't know why I put value stocks. I kind of mentioned value stocks in my last episode, but I meant more like slow grower tech stocks who are, right, we can take a look at Microsoft. Microsoft, for example, is one that if we take a look at future growth, they're already positive in earnings. They already are positive in cash flow from operations. They're not growing as fast, but they're already making money. They're paying some form of, do they pay dividends? I'm pretty sure they do. They pay some form of dividends. So this is something I would consider like more of a value-ish play. It's probably not a true value play like what value investors look at, but that's how I like to distinguish my stocks. A company that's nowhere near making money, a company that's making money in cash flow from operations, and a company that's been making money for like the past 5 years. And that helps me break down the types of where I would kind of put my companies in. Chris, TTCF, you would consider that high, but TTCF, I thought they were positive in cash flow from operations already, right? They've also been profitable, right? Positive in cash flow from operations. They're growing at high levels. So this is more like I would consider this more of a, yeah, maybe you're right, Chris, right? Speculative high growth stock. And Kim, right, it's just good to be able to break down the stocks you're in because, right, I look at every stock differently depending on where they are in the business. A company more developed, which is probably making money from positive earnings, making money from cash flow from operations, having a strong balance sheet, I would look at, and not growing as fast. When I do my form of analysis, I look at it differently compared to a company that's not making money right now, but it is growing at strong levels. So by putting them in distinguishable tiers, it allows me to look at them differently when I'm doing some form of analysis. Right? And sorry, I missed some of these questions while I was talking. So Kim, PayPal, I would consider not a true value stock, but I would consider it in that like my value plays because they are I think they are profitable, right? I'm pretty sure PayPal has been developed. It's been developed, right? So, right, they are profitable. They've been profitable for some time, positive in cash flow, and they're also growing at some great levels. So this is more like a growth value play style for me, right? Again, I'm probably using that word value differently to how others use it, but that's just how it goes in my mind. And guys, while you're here, make sure to hit that thumbs up. We're gonna take a look at stocks. Let's see. Is HPQ a good value play? And then at the same time, right, I don't just buy companies because they're good value plays. I still want them to be a value play within the market I'm bullish on. So some people might be like, Jose, why don't you just get into like finance banks if you want to get some very value stocks? I'm like, well, I don't really like investing in banks. Just not my style. I don't want to invest in a dying, not saying banks are a dying breed, but just outside of that, I don't want to invest in dying companies just because they look like they're valued at a reasonable price, right? So for me, probably even in my tier one stocks, right? You guys know my tier one stocks. I have Sorens, I have Unity, I have C, and I have Nvidia. Nvidia's making money. Nvidia's making positive cash flow from operations, and it's growing at decent levels. That's something I would consider like a value growth for me. Then I have C and Unity, which are more like more growth stocks. So I like to have my portfolio a little bit of everything. I have Microsoft in my portfolio. Activision is another one that I would consider a growth value because they're profitable right now, and those are the ones that might do well during these high interest stocks. But that's not the reason I have them, right? I just have them because I enjoy them. David Becker, banks need to learn to diversify the way they do business. Mm. That'd be interesting. And how so, Becker? I mean, I don't really think too much about banks, but how can they innovate? That's pretty cool. A method of that. Um, Hi, Jose. Today, Melly's reporting good expectations. Federico, I'm hoping. I mean, I'm expecting good, but that doesn't mean we will. Uh, right now, I mean, let's think about it. What main countries is Melly in? We know it's on Argentina, it's in Mexico, and um, Brazil. Right? Those are the three main countries that I believe Melly is hitting. Someone correct me if I'm wrong, but I do think those are the three ones: Argentina, Mexico, and Brazil. And all of them are still pretty much in lockdown. So I do think for Melly it can still be good. It can still be good, right? Those three countries. Unfortunately, right? I'm not saying it's a good thing that they're still in lockdown, but unfortunately, COVID is still impacting them right now. So in the business aspect, again, right? I'm just talking business aspect. Things like that kind of help that e-commerce platform grow. So yeah, we can see an improvement still in Melly. Um, and let's see. Do you think crypto is here to stay? I mean, David Becker, I'm not arguing about crypto, right? I do think crypto has a way in people's portfolio if they want to. Oh, things like that, and how they lend money and things. Pretty true, right? So I feel like it's so much easier to now go into like some of these online places to just get a loan. And Kim Jr. Every time I watch the stream, I want to go buy everything. You know, Kim, I mean, that might be a bad thing, but for me, right, I'm a long term investor. So, I mean, if you guys watched yesterday's video, right, I started off the intro kind of joking around that I got worried about the stock market dropping. Again, I understand everybody has different styles in investing, right? Maybe some of you guys might be a lot older and closer to retirement. So things like what happened yesterday might be very stressful. At the same time, you guys have to understand where I'm coming from, right? I'm super young. I have time on my side. So when I see red days like yesterday, I know for other people it might be a bad thing. And obviously I don't want anybody doing bad, but I know for me it's just noise, right? It's not gonna affect me. I'm investing in these growth companies. So even when we have red days like today, like yesterday, I'm still coming in with the same mentality that hey, future me is gonna be excited that I purchased at these levels. Future me is gonna be happy that I kept investing and I didn't have I didn't like sell out and stuff like that. So that's why I try to keep like this happiness. But at the end of the day, it doesn't mean I'm a perma bull. It just I understand for my stance where I'm at financially, where I am age wise. I know that for the future, I can do great returns. Historically, it's just shown that's the case. Um, but maybe my position would change if I had a different lifestyle. And Kim, you think you're younger? Probably. I always used to think I'm getting old now, right? I'm getting into my 30s in about 2 years, so still not too old. Fanny, is C still your top position? Any change in your conviction? I'm not sure if it's my top position. C, Fanny, it changes a lot, but it is my tier one stock. It is a tier one stock for me. No change in conviction. It's one of my top 5 positions. And if it's probably off by like if it's not my top position, it's probably off by like 0.5%. It's definitely up there. Edward, what's going on? I have a tax question for anyone in live stream. Yeah, I mean, definitely not a question for me. I am not a tax guy. But let's see, his question from Ed. I have a tax question for anyone in the live stream. If I short some of my crypto holdings profits and convert them into stocks, will I get taxed capital gains from the profits in crypto? Interesting concept. I'm pretty sure you do get taxed for cryptos already here in the United States. I could be wrong though. Agreed, David Becker. PayPal and Square are taking over things. Things like SoFi, right? I haven't taken out any personal loans. But if I was, I feel like I would probably go through something like SoFi to get a easy personal loan from them. If it's already getting, I mean, again, not advice. But I would say I think crypto is already getting taxed in USA as gains. So in theory, yes, you should. In theory, again, I could be wrong. We have Jamal. Do you think AMC is in a good dip? I personally don't do AMC. No intentions on buying it. Again, and guys, while you're here, make sure to hit that thumbs up. It helps so much. I know I sound like a broken record, but it really does, and I appreciate it. I have 35 views, 34 viewers today. You guys are just getting awesome. The overall consistency, I think, is also helping out. And what else am I gonna say? Today I am streaming tonight in about 12 hours. I know maybe most of you guys probably won't make it. You're here in the morning for that reason, but at nighttime I will be streaming as well in about 12 hours, and we can just take a look at stocks as well. So PAC dip, PACB. We'll take a look. All right, guys. So I think that's enough questions for now. How long till the market opens? Oh, the market opened already. Let's take a quick look at the market and let me see some of the biggest moves. We have Silo. Silo had great earnings, right? And they said pre-market the stocks were up 2%. Caesar shares were also up after they reported stronger earnings. Mr. Bear, pretty good. I mean, we had a lot of great food. Thanks for asking. And we had we watched a lot of Star Wars, which was pretty good. Yeah, Jabiki, Activision up 5.7%. Let's see if they're keeping their earnings. Lyft was also up. So let's take a look at those stocks. First, I just want to see how are they keeping their earnings gains, or are we seeing another Corsair? Right now, Activision doesn't seem bad. It's not. I promise, guys. No, I'm not gonna promise. There's a high chance I might go have some Lucky Charms today. If I have Lucky Charms today and it is green, I think that's gonna become that's gonna be my new breakfast. But Activision is keeping gains. Let's take a look at Skills. I am going to do a video on Skills later today. It is down 7%. Okay. Unfortunately, I mean, it's just how the YouTube algorithm works, but I'm definitely going to do a Skills episode now. Then what else do we have? We have Lyft. They had earnings. They are down even though they were up. Yes, Kim, Caesar's Activision's earnings were yesterday. I haven't looked at them. Caesar's up 10% after things. Okay. And let me just check again. Activision, ATVI, still keeping its gains. Okay. Normally already we had, like yesterday, I think with Corsair, we saw the sold off already. Let me just take a quick look at my overall portfolio. Let me just see how we're doing today. Okay, I have more green than I had than red. That's actually pretty cool. Upwork is down 8%. All right, Upwork might be looking pretty interesting to me. I might have to take a look at those earnings for sure. But Upwork is taking a huge hit. But we have Fastly up 4%. What else do we have? We have Square up 3%. We have Roku up 2%. Obviously still down from yesterday, I want to say, or from the past 3 days. Melly is up. We're overall, it seems pretty strong right now. Let's just hope it stays like this, right? Let me just again see Activision. Are you losing your? No, they're not. It's been 2 minutes, but it's still holding. Yeah, Roku. I mean, most of these have been down. Right? Roku's been down. I mean, I'm happy they're sitting here. This I feel is like doing great times to add. Again, what's going on, Fat Metal? How's it going? It's going pretty good. How's it going with you? Kim Jr. Roku's earnings tomorrow might pull a Corsair. Are they? Oh yeah, Roku's doing tomorrow. Roku, Peloton, Square. This is gonna be interesting. I don't follow Beyond Me. I don't know if you guys are in Beyond Me, but Beyond Me is definitely definitely interesting to watch. I don't have it, but I do enjoy it. And Datadog Datadog is also interesting. I do own Datadog. Fiverr might be taking a hit right now. Fat Metal coming out of lecture. Oh man. Hopefully you paid attention, right? Get that software engineering degree. Make that money, yo. All right, guys, now that we're actually done looking at stuff, let's take a quick look at some fundamentals and stocks you guys want to take a look at. So just post on the comments. I know some of you guys posted earlier, but let me just go ahead and post on the comments. What are some stocks you want me to do? Quick fundamental look. And I'm guessing, been thinking a lot about JD.com for the last days. Their valuation is crazy cheap. You looked at them before? I've done a few videos on them, Fat Metal. There's a great investor in our Discord channel. He doesn't post on Discord anymore. I think he might be in the U.S. military, and I think he's just overseas right now. I forget what the actual thing is, but he is super bullish on JD, and a lot of his picks have done really, really well. So I do have a small position in JD. I don't know when was my last time I did a video on them. Probably on their last earnings, Fat Metal. So I don't think much has changed in my thoughts. But remember, most Chinese stocks tend to look good in valuation just because they have that added risk. And because of that added risk, valuations tend to be a bit lower on them. So I think it's always good if you, let's say you're comparing anytime an international company, right? Understand those international risk. And when you're comparing it to an American company, sometimes they tend to look cheaper, but it's already because investors have kind of anticipated some form of risk, either behind the government, either behind interest rates, money, interest, anything. For so many reasons, that's why sometimes they tend to look cheap. So just a thing to keep in mind of. So Bray Run, they report today. All right, I mean I'm guessing that's Sunrun. And all right, Mobin also wants. Mobin, are you still here? Did you want to take a quick look at PACB? So Sunrun engages in the design, development, installation, sale, ownership, and maintenance of residential solar energy systems. All right, so we can see market cap $9.7 billion. Not a small company, not a big company either. If we take a look at future growth, the company is expected to grow 16.8%, right, Ray? So overall, nice growth stock in my opinion. One thing I'm not liking is they were profitable before, now they're no longer profitable, but not positive in cash flow from operations either. So that's kind of interesting, right? That even though the revenue has increased, they've gone from profitability to negative losses. Something to keep in mind of. Next, if we take a look at their financial health, financially, right, they are sitting right now in $520 million in cash and short-term investments and about $5 billion in debt. Again, it can all be different depending on the type of market and business they're hitting. But right now, I saw, right, they're growing at great levels. They're not profitable. They're not positive in cash flow from operations. So one thing I don't like about it is this balance sheet, right? This debt to cash ratio. It's almost, they have 10 times more debt than cash. Right off the bat, something like this would scare me off, especially, right, as we have talks from higher interest rates. You have to keep in mind, right? So the higher interest rates, I think, only scare me for companies that have very bad balance sheets. So, right, this one, it seems they have high debt compared to cash. That would be something that would kind of be worrisome. Again, the overall market as a company could be different, but just from their fundamentals, and I'm not too into the sun. Even as an electrical engineer, you would think I'm more into like energy. I'm not. And David Becker, news this morning said that all solar and industry will have supply chains probably problems due to chip shortage also not helping them either. So again, the only thing fundamentally that I see strong about them is the strong revenue growth. And let me log into, maybe Lazy FA might have something. So let me shift off screen real quick so you guys can't see me logging in with my amazing password. But yeah, if you guys want, feel free. Again, I'm not going to scroll up. I'm thankful for all the chat we have today. So if you guys want me to take a look at a stocks, feel free to post it if I might have missed it. So right, just because I don't like it doesn't mean it's a bad investment. It's just not a right. I do think companies I don't like also can do great returns. It's just not a stock that I would enjoy having in my portfolio. So I just wanna take a look real quick. Income statement, right? I mean, in the past, in 2020, they grew the revenue 7%. In 2019, 12.9. In 2018, not much. So not much. I feel like this, and it hasn't been a strong growth. They've seen a decrease. If we're taking a look at trailing 12 months, they've seen a decrease in gross margins. I'm guessing maybe COVID really affected them, but they also seen a huge impact in profit margins in just the past 12 months. And Jabiki, NVCR, sure, we'll take a look at that one. And cash flow statement, let's take a look at operating cash flow. Right, this is another thing not too fan of. Their operating cash flow margins have taken a beating over time. So overall, the business fundamentally seems like it's going the opposite direction. Stocks, sure. All right, Mr. Bear, pick one out of them. Pick one from those. Safe and reliable. So let's see, NVCR. So let's take a look at Novocure. Novocure, it's an oncology company, engages in the development, manufacturing, and commercialization for treatment of a variety of solid tumors. Okay, all right. So they have a market cap of $20.9 billion. So not a small company either, not a big one yet. Future growth, they're expected to grow at 24.3%. Doug, how much Dodge do you have? None at all. So future growth, they're expected to grow at great levels, right, Jupiki? So that looks pretty interesting. They're positive in cash flow from operations. They're expected to grow that as well. And they're also, they're positive in earnings, and they're also positive in cash flow from operations. If we take a look at their financial health, I'm already liking them fundamentally. Let's see, they have about $864 million in cash. $555 million in debt. So they have more cash than debt. Balance sheet looks great. They're profitable. They're positive in earnings. So fundamentally, Jibiki, I'm liking this, right? Now I want to take a quick look at ownership. Just see how it is. So right now, individual insider owns 14.4%. I'm guessing it's this, at least this person right here. This, I wonder who he is, but he owns about 8.7% of the business. And SF and Singer, I feel like I saw that name down there. No, I didn't. But yeah, so Jabiki fundamentally looks great. Again, this is just a quick fundamental look. I don't understand too much of the market. That might take a little too much time. But fundamentally, huge growth, positive earnings, positive cash flow from operations. Margins seem to be increasing. Financially, health also pretty strong. So a company that I wouldn't mind doing more deep analysis on if I was kind of bullish in that market. I just, the overall health, personally, I've been very, very healthy. So I don't know too much medical terms out there, and I don't really follow them. Let's see, Mobin, you want to take a look at PACB? What is PACB? And let's just take a quick look for you, Jabiki, in stock price. All right, so let's say, Jabiki, I was bullish in this company. Once let's say I like the fundamentals, then I really like the market. Like I said, I don't know much about the market, and I saw this, and I wanted to enter. How would I play NVCR? I can see first, it's a bit overextended. So if I wanted to enter, what I would do, since it's a little overextended, it wouldn't scare me away from entering the position. What it would just do is I would only open up smaller positions. And as long as it stays overextended, I would just add a little bit over time. If I was bullish and it was sitting here, the situation would be different. I would probably buy a little bit more, a little heavier side. Here, I would be like a normal position size. So that's how, right now I see it's a bit overextended. So if I was to enter for long term of things, and again, this is just me, Right now would be a point where I would just add a little bit because there is a higher risk, in my opinion, of it pulling down. But at the same time, I don't think it's bad to ever get skin in the game if I'm bullish in a company and I'm bullish on their fundamentals. So let's take a look next at what do we have? We have Mobin. Mobin wants to take a look at PACB. Ralph, what's going on? Good morning. Good morning, guys. If you're here, make sure to hit that thumbs up. It helps so much. Helps so much with the YouTube algorithm. All right, another pharmaceutical and biotech. What's the other one? The other one was in healthcare. This is usually Mobin and Jabiki, the healthcare, pharmaceutical, and biotech, usually markets I don't follow. But let's see, Pacific Bioscience right now, $5.4 billion of market cap, right? Let's take a look at future growth. Future growth, this company is expected to grow at 29.4 billion, 29.4% for the next 3 to 5 years. Hyper growth stock already. Another thing I'm going to see, this is probably more of a speculative play. They're not profitable in earnings, and they don't have a consistency. Excuse me. They don't have a consistency of being positive in cash flow from operations. So that's why I kind of would still put them under a speculative play. Let's take a look at their financial health. Financially, I wish they have a strong balance sheet. Let's see how it really is. So they have about $1.2 billion in debt and about $900 million. $1.2 billion in cash, $900 million in debt. In all honesty, because they're not profitable yet, because they don't have the tendency of the consistency of positive in cash flow from operations, I personally would have wished this balance sheet to be a bit stronger. So their fundamentals look okay. The only thing really helping me out is that future growth on it. Again, I haven't really looked at the actual business. I'm just looking at fundamentals. So the most important things, in my opinion, is what happens next. It's the and what was this PACB? It's just not the most important, but it's just important understanding the market they're in. So right, this again, just because of where that business is at, this would only be like a small position in my portfolio. Right now, I think it's sitting at some good values, right? It's not overextended from its moving averages. Again, this is one that I would consider more a risky stock because of where it's at in its business stage, fundamentals wise. But overall, we can see it's definitely sitting not overextended from its moving averages. But I still do think it could be a risky play. What's going? Hey Ed, what's it going? And guys, I'm telling you, today I'm hoping I might. Let's see. Let's try the theory. I'll have some lucky charms today, and see how things move. All right, so save Mr. Bear is a tech play, so let's do that. But I like SPR most of the ones I listed. Let's do SPBR then. Let's take a look at SPBR. Wait, what was it? SP? Damn it. SPR. Spirit Aero Systems. Oh man. All right, so we have $4.8 billion. They manufacture commercial aerostructure worldwide. Future growth expected to grow at great levels, 17.9%. In judo, market going up today, but not much. Probably dropping again tomorrow. Possibility, right? So they were obviously impacted pretty heavy by COVID situation. So we have to take that into account, right? Right, Duck, or who was it? Was it Bear or Duck? You guys confuse me with your freaking animals. And in judo, again, right? That's the great thing about being long-term investors is if the market drops tomorrow, it's just noise at the end of the day. But we can see before COVID, they were profitable. They're expected to be profitable, expected to continue their growth rate, and be positive in cash flow from operations. 17.9% revenue growth. Let's take a look at financial health. They have $1.9 billion in cash and short-term investment, $3.7 billion in debt. Again, this is tricky, right? This is a tricky one. This is definitely a tricky one because they were profitable before earnings. They were positive in cash flow and operations before COVID. But this has changed a lot. Look at this. They have taken a huge amount of debt. Maybe since 2020, actually not that much. Not one I like too much, but let's take a look at the other one. Maybe the first one you mentioned might have been better for me. So Sabre, software technology company, future growth. Company is expected to grow 23.3% on average for the next 3 to 5 years. All right. Before COVID, it seems like they were also impacted by COVID. So that's another thing we're going to have to take a look at. These are stocks that have taken a huge hit. Financially, again, it's just so weird, right? This is breaking my head. This really breaks my head when I see this, right? So they were profitable before COVID. They were positive in cash flow from operations before COVID. But the story has changed. Look at that debt growth since COVID and the decrease in cash. Both are related to airlines. Okay, Mr. Bear, makes sense. It's just, even though, right, things are going to most likely turn around for them, I just don't know. I can't see it. And let's take a look at their overall stock price, right? So this is SPR stock. So from where they were at before, they're still down 40%. Okay, so I'm happy they're nowhere near where they were a year ago, because it's gonna take some time for them to kind of hit where they were fundamentally wise. So again, I'm not bearish on the airline market, but I have to understand that, hey, they're not the same companies before. Even though if things pick up, they build up a nice amount of debt, they kind of decrease their cash and short-term investments. So that's definitely going to affect fundamentals. It's definitely going to affect earnings for some time. So I'm personally staying away from these, Mr. Bear. Not too interested in this airline market for sure. But then you can have stuff like that, right? Like Martin, right? This is ones that, again, Norwegian is up 60%. So you can have things like that happen. Right? I'm pretty sure Norwegian is gonna have Norwegian Air Shuttle, NAS. And thanks for the support, Mr. Bear. Appreciate it. I love that little chicken too, or pigeon. They didn't have a bear picture. Norwegian Air Shuttle. Is this the one, Martin? NAS. Let's see. All right, so let's see. And again, maybe this can be a perfect example of how I am wrong. Future growth, right? Because I can be wrong, right? So again, you can see impacted by COVID, expected to grow crazy levels, and stuff like very similar to how we just saw with Sabre, how we just saw with Aerospirits, right? Same effect. Now let's take a look at that financial health. Was it different? That's weird. They see during COVID, during 2020, it doesn't seem like they built up much debt. They didn't build up debt. What they did do is they actually lost a lot of debt and equity, but we'll see. But again, this one is pretty heavily leveraged. Again, 2.7 billion and $8.8 billion. So it's still very leveraged. But the main difference between this one compared to the other ones is this one didn't do much debt gain, right? It didn't. We can see 2020 started here. They didn't have a reason to increase their debt. So the business itself hasn't really changed fundamentally outside of the revenue growth, where the other ones did see a loss in like cash, and they saw an increasement of debt. So I don't know if we can really correlate these two. But I do think stuff like this, which is NASDAQ, let's take a look at it, is things that could happen with some of these companies, right? This is insane, 65% up. And I wonder, right? It's such a small company, probably has low trading. I wonder if it's actual reasons for a thing or if it's just traders kind of pumping and dumping. That's something we'll have to see in the next few weeks. But definitely different stuff. But overall, this one has just been downtrending. So I mean, look, overall, airlines don't interest me. Look at this. All the airlines we've looked just don't interest me at all. Connor, what's Roy's ticker? And I'll probably just do Roy's and ATER, unless other people have other things. I am getting hungry, and guys, while you're here, make sure to hit that thumbs up. Mr. Bear, again, appreciate the support. It means a lot. It really does. It means I can keep stuff like this, guys. Helps me continue to do this. And as you guys can notice, I've been a lot more active recently. So let's hope that continues. Wink, wink. Let's hope that continues. But let's see. All right, so Royce, let's... Connor, you didn't give me no... You're gonna make me find the damn ticker. I'm guessing it's this one. RR. Right, Connor? So, Rolls-Royce. Yeah, Fizz, I think you've been mentioning, right? They did change that name. How are you guys feeling of the name change? Was MWK a bad name for them? What was the whole reason for them changing their name? So Royce, let's take a look. 8.4 billion euros. Is that euros? No, that's not euros. That's pounds. I forget. But let's take a look. Future growth. This company, not a hyper growth stock. Not profitable either. Not profitable before COVID. COVID did take an impact on their revenue. And their cash flow from operations. So this one's going to be pretty interesting. What do they do? Are they also in the airline industry? This operates in 4 segments: civil aerospace, power systems, defense, and okay, all right. So they are. So I'm pretty sure we're gonna see the same things we saw financially, right? They saw an increase in debt during March. They paid some off. But let's take a look at their cash and short-term investments. Again, they still have pretty strong debt. They're leveraged, right? They're leveraged. And this is not right now, as there are talks of higher interest rates, as there are talks of, as these airlines have taken a beating, the last thing I will personally would want to do is find companies that have still taken a hit from COVID and that are leveraged, right? That is the last thing I want to do. Personally, again, that doesn't mean it's bad. It's just for me, I just don't see it, right? I mean, revenues have declined. Maybe revenues will come back to normal levels. They will. But now they're super leveraged, and now we have talks that maybe in the few years we will see an increase in interest rates. You're going to be leveraged, so you're going to be paying more on that debt, and that can really impact stuff. So for me, I think a really strong balance sheet is something that calls out my name a lot. Because it allows me to not worry too much about increasing interest rates, right? So, I mean, it's just what it is, right? Jabiki, thank you for the support. Appreciate it. I don't know. Is that an apple or a pear? Either or. Now you guys are making me hungry. Right? So, I think a balance sheet, it's really a huge determinant for me if I really like a stock, and obviously cash flow from operations and revenue growth, pretty much everything. But I really do like a healthy balance sheet. I would say there's very low companies in my portfolio that have a bad balance sheet, and when I mean a bad balance sheet, it's leveraged to some extent. Only if they are profitable right now, only if they are positive in cash flow from operations and they're still seeing growth, would I have it in, would they be leveraged? And I wouldn't mind it. But very rare are most of my companies leveraged with cash to debt. So now let's take a look at ATR. Martin, I haven't bought anything yet recently. And if I have, I'm still focusing on my tier 1s. That's what I'm focusing on, Martin. Tier 1 stocks. I think times like right now, is the best time where I would where I focus on my heavy winners, my heavy concentrated conviction stocks. So ATER, is this it? No. MWK. Mohawk. ATER. Did I get the right ticker? Boom, 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 boom. Where are you? Where are you? Fizz, is this the right one? ATER right here. Or is it still known as Mohawk? For remodeling, new construction. No, I don't think it's this one. No, this is MWK. All right, never mind. It's this one then for sure. It's this one. ATER. Tyrion. They have a future growth right now, right, of 25.1%. Strong future growth. This company, they are achieving positive in cash flow from operations. That's good. They are expected to be positive. So this is more of like a growth stock, a little bit less speculative because they kind of are positive in cash flow from operations, and they're expected to be profitable at least within, it seems, within the next 12 months, and continue to be positive in cash flow from operations. So fundamentally, strong growth. I'm really liking it. Financially, Again, right? This leverageness is not something I really like. $26 million in cash, $87 million in debt. The other thing to keep in mind of is, though, how long is this debt? Is this debt due in the next 10 years? If it's due in the next 10 years, it can allow to overlook it to some extent, but still not much of the leverage right now. They do have a good portion of inventory. They do have positive in cash flow from operations, and they are growing at strong levels, right? So definitely not as many cons as there are pros. But again, I really like a clean balance sheet. It really helps me eliminate a lot of the stress. By having a clean balance sheet, it tells me, hey, if a company does bad for a year, it's okay. They have a clean balance sheet to do well. If interest rates go high, it's okay. They have plenty of cash to be able to support it. They're not leveraged. It kind of eliminates a lot of the risk in my mind, right, for me. I mean, just think about it. If you owned a business, what would you sleep better at night with? If you had less debt and let's say you had a bad year in your business, you would probably be okay even if you had a nice amount of cash. Obviously, it would suck, but you wouldn't stress out too much. But yeah, guys, that's it for today's episode. I have to go work on my video. I am gonna work on a video on scales. It's going to be like a bear versus bull type style. So I hope you guys enjoy it. Like always, guys, thanks for passing by. I'll see you guys later tonight. In about 12 hours, I will be on. So for those that want to pass by. And Jabiki, Mr. Bear, appreciate the support. You guys, it really does help a lot, the support. So thank you guys. And see you guys again later today. And make sure to hit thumbs up on those videos. So have a good day, guys, and peace out.